Indian hotels witnessed strong recovery in the December quarter with domestic revenue and overall margins reaching close to pre-COVID levels. Infections under the third wave of the pandemic have more than halved in the last couple of days, and various state governments have also started easing restrictions on hotels and restaurants. IHCL is witnessing signs of recovery starting this month and is expected to bounce back to pre-COVID levels in the early part of next fiscal year. IHCL would accelerate hotel additions under the asset-light route with more share of management contracts. Improving demand-supply dynamics and IHCL's presence across economy, semi-luxury and luxury segments would enable IHCL to emerge stronger from the pandemic woes. IHCL has strengthened its balance sheet by recently doing a rights issue worth 2,000 crores. It has repaid debt from the fundraise, with the net debt to equity coming down from 0.93x in September 2021 to 0.32x in December 2021. Recent acquisition of Air India by the Tata Group opens up an opportunity for IHCL in the form of increasing in-flight catering services as well as room stays by the staff. In Q3 FY22, IHCL's consolidated revenue reached about 81% of pre-COVID levels. Recovery was sharper in the domestic market, with revenue per available room reaching about 89% of the pre-COVID levels. This was better than the industry RevPAR of 79%. On a same-store basis, IHCL's occupancy and average room rates reached 94% and 95% of pre-COVID levels respectively. In the domestic market, leisure destinations continue to outperform with revenues at 120% of pre-pandemic levels. Corporate and business destinations such as Bengaluru, Delhi and Mumbai continue to lag with revenues at 80% of pre-COVID levels. On the international front, IHCL's revenue reached 74% of pre-pandemic levels. IHCL's EBITDA margins at 29% were close to pre-COVID level of 31% despite a lower revenue base. It has reduced the cost structure amid COVID-19, bringing down the total expenditure by about 17% compared to pre-COVID levels. IHCL posted profit on a net basis for the first time post the pandemic. IHCL stated that Jan 22 is likely to see the impact of Omicron variant. However, it has started to see some recovery from the start of February. The company expects recovery time of 3 or 4 weeks compared to about 3 months taken in the previous wave. While leisure segment continues to drive demand, IHCL is witnessing pickup in business and corporate segments as well. Domestic air traffic has also improved considerably since the start of the month, indicating strong hospitality demand. With the fear of COVID waning, IHCL aims to enhance hotel openings. Currently, it has more than 60 hotels in the pipeline with room inventory of about 8,000. This compares with 17 new hotels signed in 2021. IHCL stated that it would continue to follow the asset-light growth model, aiming to have about 70% of the room openings under management contract format, wherein IHCL will manage the hotels rather than owning them. IHCL Cumin, which is the food delivery business, it has expanded to 20 cities with more than 75 restaurants and has reached gross merchandise value of 58 crores in 9 months of FY22. It is also enhancing Ama Bungalow Stays business, having built 72 properties so far. IHCL aims to increase the Ama footprint to 500 over the next few years. Ginger business is also performing well, and the company aims to buy the remaining 37% share in Roots Corporation, the company under which Ginger brand is housed, to make it a fully owned subsidiary. IHCL's occupancy reached 94% of the pre-COVID level in December quarter, and room rates have also witnessed a pickup. With cases under the current wave receding, the company expects a faster recovery and aims to reach pre-pandemic levels in the early part of FY23. Also, a lot of smaller players have been affected by successive waves of COVID-19, and the supply in the industry is expected to shrink. IHCL expects supply to remain constrained over the next 1-2 years. With demand coming back and people preferring branded hotels in the pre-pandemic era, organized players are likely to witness increased occupancy as well as room rates that would boost the overall revenue. At the current market price, the stock of IHCL is trading at 21x its FY23 projected earnings, close to its long-term historical earnings. With demand pickup and margin improvement on account of cost control measures, we expect strong earnings in the next fiscal, which would drive the stock. We advise investors, therefore, to add the stock to their portfolio.